How do you say it?
Yeah.
Hello, everybody. We are live today with Asad, Faruqi, and I'm going to click go live on Instagram. Let's see. All right. We are officially live. So, Emily Kendall here with Spa Project, MedSpa Consulting and Coaching. And we have Asad here. Asad and I recently met. He, through networking, he joined our Aesthetic Connections Networking Club, which is a free group to anyone in the aesthetic industry. So we have spa owners, we've got estheticians, nurse injectors, massage therapists, hairstylists. We also have vendors, some of our favorite sales reps and marketing gurus. We've got med spa attorneys, and we've also got CPAs, and bookkeepers. So super excited to have you today. We chatted a little bit um, and thought that this would be a really good idea to talk tax planning. But I'm going to introduce Asad. So, Asad is a licensed CPA based in New Jersey who helps business owners simplify their finances and reduce their tax bills. He specializes in tax planning and accounting for med spas and real estate investors. So, if you're a med spa owner and looking for some real estate, I guess that's a really good win for you. Asad works closely with clients to streamline their accounting and build proactive tax strategies that often save businesses thousands each year. His approach is practical, straightforward, and focused on long term results. He's passionate about helping business owners gain financial clarity and keep more of what they earn through smart tax planning. So, today we're going to talk about tax planning to reduce taxes and managing accounting and bookkeeping for med spa owners. So, welcome, Asad. Thanks for being here.
Hi, welcome. Thank you. Thanks for having me. Very excited to be part of the Facebook group, first of all.
Yeah,
And thanks for doing this.
absolutely. So, how did you get started in accounting? How did you choose the wonderful life of accounting?
Well, honestly, I was always, into business where, I wanted to be a business owner and then, had an option to choose between accounting and finance, decided to do accounting because it's safer. You can actually become a CPA firm or whatever, which, now I did. And that was always the plan. So I started my journey, went to Rutgers, which is the New Jersey State School here, and started a small local CPA firm. Went there, learned the ins and out of the business, then went to a big four accounting firm, EY. Got to work in some huge corporate clients. Learned the how the rich people are saving on taxes, the strategies that they're doing, in positions that they're taking when it comes to their taxes, their legal matters, and then eventually decided, hey, this is the time. I want to work with people who I believe genuinely need my help when it comes to their tax and accounting. And so that's why became a firm owner. And then apart from being a CPA, a lot of my expertise is making sure that I help my clients with tax planning. We have advanced tax planning software, so we're making we're taking strategic tax planning strategies and applying them to businesses. Again, every business is different, so we want to make sure that we're doing that correctly and in a way where you don't, yeah, you can take everything you want right now, but at the end of the day, if IRS doesn't like it or they don't approve that, they will always come back to you. So you want to be careful. I always tell my clients, hey, I'm helping you save on taxes, yes, but I'm also helping you stay compliant with the IRS, right? Because you don't want to deal with the fines, penalties, and interest at the end of the day. So,
Yeah.
that's a little bit of introduction about me. Now, obviously, help clients with their accounting bookkeeping side, make sure that they actually know their numbers, which I'm sure as well, that most businesses, they're just busy running their business, and they don't have not enough idea about the accounting side, right? They just know, oh, money's coming in my account and that's good enough, but that's not the right way. You want to know at least the basic of accounting, or the numbers that you have in your business. And then with taxes, right? Yes, everybody's filing their tax returns, but tax planning will actually save you. Um, just filing the return is not enough. So, yeah.
Right. Right. Absolutely. I mean, I before I became a business owner years ago, um, way before that, I was a 1099. So I didn't actually have my own brick and mortar, but I was still technically a business owner, and it took me quite a while, to kind of figure that out. I still needed some of my own tax planning and needed to understand how to save for taxes and what I could spend money on for expenses and that kind of thing. So, why don't you, maybe you can answer this. So, like, you have experience with working with like huge companies that, definitely want and learn how to take advantage of these tax benefits, or tax advantages, however you
Hmm.
would say it. How do you, or are you able to do that for like, these smaller businesses who are generating, less than a million or less than $500,000 a year or less than 100, like what are some of the ways that we can prepare, to save?
Right, right, absolutely. So, you know, I will actually be sharing some of the more common strategies that everybody can actually use, depend again, irrespective of how much you're making. Depending obviously your income level, your structure. There's a lot more you can do. But something that's very basic and everybody should be looking at is depreciation. Please don't miss out on depreciation expense, because it's a non-cash expense. You don't actually have to go and pay separately for that, right? So I'll give you an example. If you have a med spa, you have laser machine or medical device or aesthetic tools, right? um, you can't just take it as like a one-off expense. You have to depreciate it. But if you know what you're doing, you can take bonus depreciation. You can take section 179. We have these tools, that you can accelerate the depreciation, so you have a bigger loss. And then obviously you can make sure that you invest that money into something that's more beneficial, whether it's your business or investing, or it could be anything. But the idea is that you are claiming a bigger loss on your tax return. So depreciation is key. Something else, if you want to take something very basic, I usually always check, if clients have their retirement plans. Um, if you were an employee, everybody know, oh, I'll get a 401k, and it's very straightforward. You're putting some money in. But as a business owner, a lot of us, our business are basically our baby, so we're putting everything back into our business. But what's also important is that you want to plan something on the side for retirement, right? So we have options like SEP IRA or solo 401k, right? So again, most business owners that I talk to, were they just so involved in their business, they don't want to think about the second option, the retirement or the anything else. They want to put everything that back into their business, or they just too involved to even think about it, right? But the goal is that you're planning for your life, right? Business is there, will always be. You want to make sure that it's growing, you're doing well, but you can take advantage of tax-free retirement accounts, like especially your solo 401k. For 2024, you can invest up to 66,000 in just 1 year, and you can just put that money, into your investment, or and you're not paying tax on that. So again, those few strategies, just does just that, can actually make a huge mark. Again, obviously, I know not every business is, they don't have that much cash, but the idea is you want to put in as much as you can, whatever that's feasible for you.
So
Um,
when would you say that's a good time to do that? Because like I would say, the majority of the people that I come across and work with in the industry, they are not always paying themselves, or they're not paying themselves what they'd like to be paying for themselves.
Right, right.
And they,
Yes.
they've also got this equipment, and sometimes they're buying this equipment because of a tax. Like they might not necessarily be ready for a piece of equipment, but they get maybe talked into it,
Yeah.
or they are thinking, okay, if I buy it as a tax write off, it's basically free. Is that true?
No, that's absolutely not true,
Okay,
first of
okay,
all.
good.
Now, there are tax
Yeah,
benefit, right?
right.
Everything that you have as an expense, you're basically claiming that. So you technically are reducing your income, and low income means lower taxes. So that's true to an extent. But I always tell my clients, hey, I work with clients throughout the year and we run the numbers, right? If you were going to buy something that's expensive, that's going to put a dent on your cash flow. But again, you should never look to buy just for your tax purposes, right? So if it doesn't make sense from a business perspective, just don't do that, right? It's not worth it. Again, I'm a tax CPA, and I'm telling you, please don't do that. Tax, yes, there are things where you're doing where it's going to be a good, positive, ROI for your business. Where yes, you get a laser machine, let's say, right, and then you're depreciating it, but I would rather, my clients wait until they're actually ready financially, where they're in a position they can actually do it. And then tax benefit can be, an added benefit, could be like a cherry on the top. That's how I usually like to take consider that. And then your other question about, how much they're paying themselves, or, they're not able to pay themselves. So it all depends on your tax structure, right? So we have LLC, we have S corporation, we have C corps. So it varies depending on where you are, your income level. A lot of people want to consider S corporation because they probably learn from somewhere. Oh, if I become an S corporation, I don't have to be self-employment tax. Yes, that's correct, but it depends on your income level, your admin costs, and all few other factors. But generally, I tell people like, hey, if you're not netting at least 60,000, right? That's for the full year. Your net income, not the top line, not
Yeah,
the revenue,
can I
but
elaborate on that just to make sure whoever's listening that they understand what that means? So if you're going to run your profit and loss statement in, let's say, QuickBooks, or is it Zero, or any whatever software program you
right,
use, you're going to have your revenue at the very top. Then we're
yeah,
going to have cost of goods sold, and that line item will include all of the supplies and retail and anything that you use that aids or assists in your service, right?
right,
Then
right.
under that is all of your expenses. So we're deducting all of these things, and when we get to the very bottom, that's your net profit. That's what's left over. All right. So I just wanted to clarify.
No, I'm glad you did that because,
Yeah.
again, that's a big question because, people who don't really understand a lot about finance, that they're confused. Hey, what do you mean by that? So,
Right.
I'm glad you did that. So it's your net, your profit, basically, right? You take money and then you have like all those bunch of expenses. Then we get to your bottom line, your net income or your profit. If that profit amount is less than 60,000, we don't even want to have that conversation. It's not worth it for you to become an S corporation. And even if you do end up to that 60,000 plus mark, then you want to consider, hey, if it's
Are
worth it
we
for me
are we talking annually, or is this a month?
annually. Yes,
This
yes,
is
yes, please.
annual.
Yeah. Okay. Yeah. So annually, if you get to, 60,000 net, at least, then you want to have the conversation, right? You want to consider if it's worth it for you, or you want to wait another year or so. Because again, what happened is when you become an S corporation, you save on self-employment tax, which is 15.3%. Now, there are there's some, it's a bit of complicated topic, but I'll try to keep it as easy as possible. So just think about this. You get taxed on everything that you make, right? You have the income tax. But if you are self-employed, you have this extra tax. I like to simplify it as extra tax, which is 15.3%. Now, you're making money, you're getting taxed, but then you have to pay this additional tax of 15.3%. There are some, deductions. Obviously, you get some, self-employment deduction. There's QBDI. But again, the idea is if you want to avoid the self-employment tax, then you can consider becoming an S corporation. And the reason that I say is if you're netting less than $60,000 a year, you don't want to consider it because why? Because if you become S corporation, you have expenses like you have to file a separate business return, you have to have proper bookkeeping record, because now you're a corporation. You have to run payroll for the owner himself, right? So it's a lot more going on from a tax perspective. You are basically running a corporation from tax point of view. So just making sure you want to keep those things in mind, and then maybe want to convert to S corporation. I have had clients who convert to S corp, and they ended up saving $30,000 a year, right, year over year. So it can be a lot. But
Yeah.
again, depending on your income level, depending on what your plans are, whether we have a lot of assets in the company. Those are a few things that we want to look at. And then based on that, you obviously become an S corporation.
Okay. Well, I'm curious to know what your thoughts are on the amount of, dollars we should be saving based off of that net, income. So, like, do you recommend? So, years ago, when I was a 1099, and I just worked in different spas or salon and had my own little room,
Yeah.
working. And then even when I got into my own business and had my own little aesthetic business, I would take like I didn't know. I just kind of threw these numbers out there. I would take anywhere from like 25 to 30% of any of my income. So any of my sales I would usually do it by week just so
Yeah.
that it wasn't like a big chunk that hurt, you know, or daily, but it was easier to manage if I did it weekly. And I would put that money into a separate account. And I called it a tax savings account. And then, at the end of the year, like I didn't touch that money. So then it was like that was how I paid my taxes if I owed anything. So,
Right.
so do you recommend doing that, or do you recommend having healthy bookkeeping habits and following and saving that money based off of your net profit and your profit and loss, or just by the income that's coming in?
Okay, so I'm actually really glad you asked this question because again, it's one of those questions like, hey, how I'm supposed to save on taxes throughout the year. Now, everybody should be, they should be making sure that they're doing their bookkeeping, right? Because that's crucial, especially if you're growing your business. You want to make sure now if you have something very basic, you might get away without doing it, but generally you want to make sure that you have this proper bookkeeping record.
Yeah,
Otherwise, it's going to be a bit of problem for you,
right.
right?
Like you've got employees or devices,
Absolutely,
or
yeah, yeah,
you're starting to have, if you're paying someone for marketing, like you're starting to have all these extra costs and things start getting complicated and you're having admin time, you
yeah.
probably need to be bookkeeping.
Yeah, absolutely. Yeah, just making sure your records are clean, right? Every month, because again, if you don't know, just because you know what's coming into your business, the cash that's coming in the business, that's not enough, right? You want to make sure you get to the bottom line, the net income amount. Now, to answer your question about how do you want to save, how do you want to prepare for those tax payments throughout the year? Now, somebody who's just starting out, what I usually recommend is 25% of your income is a good estimate amount that you can save, and then at tax time you can pay them off. Now, one caveat is that IRS actually requires you to make those payments throughout the year, right? Again, depending on your income level. If you're, let's say you ended up, somebody who's just starting out, they ended up just making 40,000 a year. That's not a big amount. Again, you probably have your expenses, especially if you're starting out at MedSpa, you're going to have a lot more bigger expenses because you made some investments. You obviously probably didn't have that much income coming in. So depends on different factors like that. But generally, a good idea is making those estimate payments. So you are supposed to make 4 quarterly estimate payments, and usually that's where QuickBooks is really helpful. Where you know how much your bottom line, your net, your profits are, right? So we only pay tax on the profits, right? So no profits, no taxes. And we have this running joke in the accounting community. Because thanks to, again, TikTok and social media, a lot of people come with like, hey, how can I pay $0 in taxes? And there's this joke where we tell people, if you want to pay $0 in taxes, don't make any money. You will
Right.
never have to worry about taxes.
Right.
So, but the idea is, you don't make money, you don't have to worry about taxes, right? It's just like that. And then, if you're starting out, you're going to be a lot more expenses, right? You're making a lot more investment in the business, so we don't generally expect a lot of profit. But it varies depending on the size of the business. The bigger business, obviously, I actually had a um, client who I recently onboarded, and they said they weren't very happy with their last prepare because they ended up with a huge tax bill
Yeah.
because they weren't making those estimate payments. And what happened is, if you had a really good year and then you have to make those payments at once, you have a huge tax bill, but that's not it. You have to also pay, penalty for late payment, right? Because
Yeah.
IRS expect you to make payments throughout the year. They don't want to wait till the end of the year for you to come. So those are a few things you want to be mindful depending on where you are at. If you're just starting out, you know, you can obviously plan accordingly. But if you are someone who have a more established business, you have more income revenue coming in, then you really need to be on top of your game and making those estimate payments for federal and state, depending on what state you have. So yeah, you really want to be careful about that.
Okay. Well, so then how do we reduce our tax liabilities? Like, how do we reduce what it is that we're going to have to pay? Are there certain categories in which we you know, code our expenses that benefit us better than
Yeah,
others?
yeah, absolutely, right. So the big thing is your tax structure, right? So if you are an LLC, S corp, we obviously touched upon it earlier, but that's going to make a big difference how much tax you pay. So S corp is a big one. You become an S corp and you are saving 20, 30 grand every year. That's a big deal, right? That's extra cash that you have that you don't have to pay tax on. So
So
that's a
you
very big
recommend
deal.
that once you get past that 60,000 net profit.
Correct,
Okay.
correct. Yes, that's correct. That's when you want to consider.
Okay.
And then, depending on where you are at, what state, what exactly are you doing? We actually have these reasonable study guide basically, and we basically give you like, hey, this should be reasonable study. Again, this is a bit more technical terms, more technicalities. If you are an S corporation or you probably know about reasonable compensation, and you want to make sure that it's done accurately, it's done correctly, and based on that, you're extracting those tax savings. So we have those tools, softwares that we go with our clients, but mostly you want to make sure that hey, if I'm touching that 60K mark annually, then S corp can be a big deal. If you have more cash, as I said, retirement accounts are just straightforward, right? Think about it. You put money into your 401k, and that's it. You don't have to you don't have to pay tax on that. So that's a big one. Most business owners don't really consider that. Some of the other options that you have are, your qualified business income deduction, and it's a bit more complicated, but it's very helpful because you're basically getting 20% QBI deduction. So it's like a business deduction, but then it also phases out. So if you are somebody who's high income earner, you're going to phase out, and that's why planning for your taxes is important, right? You might be expecting some credits to apply to you, some might not apply, depending on your situation, depending on how things are going. So those are just few key points. Something else that I really always mention to my clients is bookkeeping is actually going to be one of best tax saving strategies, because if you don't track your expenses, you're never going to claim them, right? Think about it. It's very easy to lose track of things, and if you just want to worry about your taxes at the end of the year, it's not gonna be beneficial for you, for just tax purposes, and then also for your business growth, right? And I'm sure you're a consultant, so you probably deal with this a lot more than I do, but if your books are a mess, you don't know where the numbers are, where the money is coming from, where the money is going. There's you cannot take those decisions that will eventually help your business grow. So
Yeah,
that's absolutely key.
absolutely. Like I think of bookkeeping as two different things. You know, they're it was made for two different reasons. One is so that the IRS can, you know, get
Yeah,
paid. You know, they want their money. They want their taxes that we owe them for, you know, the income we earn.
yeah,
But then the other piece is to help us understand how to grow our business. If you are bookkeeping correctly and staying organized and staying on top of it, you can, how do you say it? It's like you can start to see patterns in the way your business operates. And so when you see these patterns and you're on a month to month flow and things are kind of normal, um, it's easier for you to find where there are mistakes. It's easier for you to find where things are going wrong. It's easier for you to investigate because especially in the med spa world, you know, this is the main industry I've ever worked in. So I, you know, can say more about it, but it's like it's so complex. There are so many areas of knowing your numbers, so many different, you know, key performing indicators, so many reports. You've got so many revenue streams. We offer so many different types of services. So, you know, injectables. We've got, you know, tox, filler. Like every single service that you offer is a different revenue stream. So it's almost like a different business because you've got different types of supplies, marketing efforts. You've got different people that do those services for you. So it's so complex and can get very complicated
yeah.
and hard or easy to, you know, not pay attention to because we lump everything all together and we're having issues and we don't know how to figure out what the problem is.
Absolutely, yeah. And again, as you said, it's I think I like to, think of it as a two-step process where, you obviously have to get it done where you know exactly, hey, this is my profit and loss, my balance sheet, but then also use that to make those decisions, right? And where, oh, this is what I spend on marketing, my Google ads or, marketing in general. And then was that beneficial for my business or was it not? Was the ROI there? So those are the decisions that you want to make for for future years, for future months. If I'm paying my employees a certain salary, is that good enough? Are they actually providing the value, or is this something I need to change? Revenue's going down. All those things obviously it just adds up because again, but most entrepreneurs in general, I guess, they're very focused on their business. They want to kind of avoid the tax, the numbers discussion, financial discussions, and then but eventually as they grow they do realize that hey, this is something important. If I don't pay attention to this, my business might fail or might not do as well as I would like. So yeah, absolute bookkeeping or your accounting is absolutely crucial.
Yeah, it really is. I work with med spa owners closely, and so many people I come in contact with, they aren't really managing their books, and if they are, it's everything's getting lumped into the same category, and so it's kind of like pointless. So very important to have it all itemized and separated out. Um,
Absolutely.
yeah.
That's the key. Again, I guess going back to the same point where if you can't get it done correctly, business never gonna grow, right? So for tax purposes important, but then also for your business growth. So very important to keep that organized. And then I also want to, touch on some horrible tax advice that we have and how you
Yes.
know med spas can actually potentially save themselves from those advice. Because again, I always tell my clients, hey, it's just because you filed your tax return does not mean your job is over, because IRS can come back. They can come back with fines, penalties, and interest, right? So usually that's why whenever we start working with a client, I actually go back to the IRS and make sure that their previous record is clean. So, because what if they come back after a couple of years and, they ask like something wasn't done correctly?
Yeah.
Because IRS is pretty slow. They're not gonna tell you the next
Oh,
day or the next month.
yeah.
And again, they for them it's like, it's your problem. We're supposed, if I run a business, I'm supposed to get everything done correctly, and then they're the one who are gonna check everything is accurate or not, and they will question you as well. So they have a lot more power. You don't want to fight with them. Obviously you want to protect yourself, you want to save as much as possible, but the goal is obviously to, first step is making sure everything is done accurately. So that's a bigger deal in my eyes, at least. And I want to make sure my clients are protected with the IRS, because nobody wants to get those tax notices, IRS notices. They're not fun.
Yeah. Well, so where do you like, if we're trying to, get the best bang for our bucks and spending and categorizing our expenses, like where do you see the biggest tax advantages as far as expenses go?
So do you mean so can you
Like
can you explain a bit?
marketing. Yeah, like because I know sometimes, I'm not a tax expert, I'm not a bookkeeping expert, but I do know that like their marketing, for example, might have a certain percentage that you get to write off of those expenses, or like maybe your home office, or you get a certain percentage. Like, where are we in all of that? Like, what
Right.
the best percentage is there? As can you answer
Yeah,
that?
absolutely. Yeah. So again, there are specific expenses like your home office, or let's say you have a vehicle that you use for your business and personal. Now, for these specific items, or things that are not fully used in your business, that's where we have a percentage. If that's not the case, if you spend on marketing just for your business and that's it, those are basically 100% taken as an expense. Now,
Okay.
when I say that's a tax expense, that doesn't mean that's a fully, that you get basically a credit for that, right? Because let's just say you make $100, very basic example, you make $100 and then you have expenses for $70, right? Now your net profit is basically $30,
Okay.
and then you pay tax on that $30, right? So
Okay.
it's not that $70 people usually think like, oh, if I buy something for $70, it's basically it's like it's a tax credit or tax write-off. IRS is going to pay me. No, they're not going to pay you. The only plus is now your income is very low. It's $30, right? So you'll pay tax on that $30, not the 100 top line or revenue that you have. Hopefully that makes more
Yeah,
sense.
yeah, yeah. Well, and I mean, I think a few years ago we got a letter back saying, "Oh, well, we're not going to pay you. You can't write off this type of expense." So we're like, "Okay."
Yeah, no, and that's why, proper documentation is very important, right? You want to make sure everything you have, especially when it comes to things like where, it's a vehicle that you use for your business and personal use, right? Or let's say you're working from a home office, right? We have specific templates that we use, that, we're taking all the information that's required. So in case ours come back, we have all the evidence, right? So obviously we do rely on the client to provide the correct information, but the idea is everything is documented, everything is properly done. So, you don't have to worry about the IRS coming back and
Yeah,
asking for.
yeah,
Now, yeah, there, again, audits still happen, right? It's just part of the game. If you are going to be in business long enough, you might get selected randomly. But, if you have done everything correctly, you don't need to worry about anything.
yeah. Well, so many years ago, when I first opened my aesthetic business and I started to run payroll, I decided, okay, I needed um, to start using QuickBooks. And I thought that I was going to be so brilliant and learn all the ins and outs of QuickBooks. So I hired somebody, to do some training with me for a little bit. And then I started kind of taking over, and um, I got so overwhelmed, and eventually I couldn't do it. And so when do you recommend someone hiring a bookkeeper rather than trying to do it themselves, because things. My dog just started barking. Um, but when you're, when you're working with clients, like our clients are working with clients every day, when do they have time to do these books? So I'm like, for their knowledge, like when would be a good time to suggest that they hire somebody?
Yeah. So again, most of my clients, we are the one doing their accounting, bookkeeping. Usually, if somebody's just starting up, they just started, they want to do it themselves. What I've seen usually is, again, what I generally recommend is, hey, just give yourself 6 months maybe, and then try to do it every month at least. So, and then if it works for you, that's fine. If it doesn't work for you, then you really want to make sure that you hire a professional who can help you. But especially after, I would say that you're making a decent amount of money. And again, it can vary because some businesses, they have just a lot more transactions going on, employees. So even if their net or profit is not too much, there's a lot more going into business where the owner cannot handle that, right? So it varies, but generally the goal is, like, you can try for 6 months and see if you are consistent, if it's something you can handle on your own, or if you don't have questions. We generally have a tax portal. That's where a client communicate to us. If they have a one-off question, they can always ask us. So we try to be as reasonable and try to be as helpful as possible. But when it comes to actually doing the work, I think most clients, they, as you said, right, they just don't have the time to
Yeah.
actually do it. And then it's something that, doesn't get done at all. For clients that we actually help them, we're doing it on a monthly basis. They get their P&L every month, so it's like they know exactly what it is. I try to not just email them, hey, this is your financial, that's it. We usually do, what we do is we'll do like a review video where we record, we'll tell them, like, hey, this is what it is compared to last month, everything's looking good, or something seems off, or can you explain this or that. And again, based on that, client can, they can obviously go and make their decisions, and try to grow their business.
Yeah. So you guys do bookkeeping and your CPA.
Yeah, so I have three core services that I offer. That's tax tax preparation, obviously, tax planning, and bookkeeping. So that's it. I try to keep it, you know, simplistic. I don't do CFO services. That's not me. I just try to provide, the numbers, the tax savings and everything, and then clients can, I want to enable them to make their decisions based on, however direction they want to go for it. Yeah.
Yeah. And so just to define for everybody, like what's the difference um, between the CPA and the bookkeeper? Sounds like an easy, answer to that, but I just want you to clarify.
Yeah, so I mean, as a CPA, we do a lot more on the tech side, right? If somebody is just a bookkeeper, they generally don't deal with anything related to taxes, so tax filing, tax strategy. Um, the good part about, if I'm the one who's doing client's book, if my team is doing it, we know the tax that they're going to pay, so we can help them with their estimated payments. We exactly know sometimes, and they're obviously knowledgeable people, and not just knowledgeable people in every field, but when we talk about bookkeeping, there's some bookkeepers who might not understand the tax code as well, and then they're more likely to make some mistakes. But generally, our focus is a lot more on the tax side, and accounting, bookkeeping as well. So yeah, we try to provide clients a full picture basically.
Yeah. Well, I love it. I recommend having a bookkeeper and a CPA. I've tried doing, I've tried filing my own taxes a few times. I've tried, managing my own books, and it is not anything I love. I am so much better at so many other things. And so if you are struggling and hate that part of your business, you should hand it off to somebody else.
Yeah,
That's,
yeah.
that's,
Again, if I usually tell, somebody who's just starting out, I tell them, like, hey, if you really want to try, just give yourself 6 months, and if you actually are consistent, good for you. The reality is most people are not, but you never know. You can give it a try, and then and you can see if it's worth it for you.
Yeah.
The other point is that you do want to consider about your sales tax registration when you're just starting out, right? So those important tax registration, you're making sure that you're actually registering your business. All those things are obviously very important depending on your state. So that's something you do want to keep in mind, right? That's why you
Yeah.
do want to connect with a professional and get that tax advice at least, so
Yeah.
you're starting at the right point. Yeah.
Yeah. I've noticed like my clients that have partners, business partners that are both actively working in the spa, they are the ones that are able to do a little bit more of this hands-on stuff just because there's two of them and they can kind of split duties between marketing and keeping up with their numbers and bills, sales tracking and all of that. So if you are solo, give yourself some grace and start building your team of people to help you manage your income and all.
Absolutely. Yeah. And again, especially when you're starting out, I mean, it does apply to everybody, but, especially when you're starting out, you have all those things in your mind where, which are, again, not true. Like, hey, I can just start an LLC. I can start writing off everything. Now, LLC is not going to save on taxes at all. It's a huge misconception out there. But LLC, it's just a legal entity for legal perspective, right? From a tax point of view, it's not going to help you at all. We have like different tax structures like S corp, C corp, sole proprietors. So again, depending on where you are at, that's how you will be taxed. And then making sure that you're making those estimate payments, right? Again, very key point. If you're just starting out, you want to understand how much you think your profit will be, and based on that, you will be taxed, right? If you have other income, that will obviously change things also. And then some other I can think of some other was like like I think you also mentioned this. I can just go and buy a luxury car and write that off. No, you can't just buy the G-Wagon and write that off and let the Iris or Uncle Sam pay for that. No, it's not that easy. And usually I tell my clients and potential clients sometimes, like, um, if you want to know what is deductible versus what's not, generally, the IRS rule is, and again, it's for general purpose. There are obviously some specific things that you want to consider, but generally, you want to consider if it's something that's reasonable, ordinary, and necessary, right? So if it's ordinary, reasonable, and necessary, then it generally is deductible for business purpose,
Yeah.
right? So
Yeah.
that's a basic code that I usually do share with clients just to help them out. And then there are different tools like QuickBooks Online, right? If you are somebody who travels a lot for your supplies or anything like that, there are tools like MileIQ that you can use. Again, they're there to make your life easy. So if you think that will simplify your business life, then obviously use them. But I like to keep things simple as possible, unless and until you actually know or have a very genuine purpose to include it, a new
Yeah.
tool, because you don't want to overcomplicate anything.
No, I absolutely love that. So you said the three things are things that are ordinary, reasonable, and what was the third?
And necessary.
And necessary. And so I I absolutely love that because when you're
Yeah.
kind of thinking about even like expanding your business, it's like right now we need to maintain what we have right now. And are the things that we're buying, are they necessary, reasonable, and ordinary? Okay,
Yeah.
that's simple. It's like, yeah, we got to have that. It's like basic needs. These are the things we can spend our money on, especially if your cash flow is short
Right.
and you're trying to build it. And there's still so many moving pieces to running a med spa, but if we can think in those simple terms, like, okay, well, that's how you build cash flow, is keeping it to the necessities.
Right. Absolutely. And again, just to add to that, I think I just remember this. There are some clients where if you're just preparing their one-off tax return, and they will send us their expense sheet, and we'll take a look, and their expenses would be, you can tell that they're just basically estimates, right? It will be 500 for advertising or 400 for this, $100 for this. Now if you have all those zeros at the end, IRS know, they know that it's you're just making those estimate, right? You don't have, they're not actual numbers. And
Right.
if you have that, you're actually you're way more likely to get audited.
Yeah.
So you want to make sure that numbers, they are accurate, they're actual numbers, not just estimate, like, oh yeah, $100 for this, $200 for this, or 2 grand for this. So again, going back to your main point, has to be actual numbers. And if you are using a software like QuickBooks Online, that will definitely help you out on this.
Yeah, because that connects directly to your bank account. And like from my understanding, and correct me if I'm wrong, the IRS wants to know what actually got deposited into your bank account. And that's what you're going to get taxed on. Like the money that
Right.
actually shows up, that's what you're going to get taxed on. And so those are the numbers that your bookkeeper typically will pay attention to. Now, you might have cash that you might put into the business. And so, how does that work? How do you
So
account?
you have to record that separately, right? So if you have cash, again, as you said, your bank accounts are connected to QuickBooks Online. So that's like a direct process. But then for cash transactions, you have to report them separately, right? And that's why I always tell clients, hey, this is not just about your bank accounts. You have your loans, right? You have your assets. Everything has to be, you have to enter everything on your QuickBooks account. You have to reconcile all the accounts, right? And then that's what we want for for your business purpose too, and then for ours, absolutely, right? So, those are things that you really want to know before you start just doing anything.
Yeah. Something I'm going to add to this is just kind of reminded me of when I was running my aesthetic business. I meet with my bookkeeper regularly,
Hmm.
and even though she is collecting the information from my checking account and she sees what transactions are going in and out, and then she'll reconcile them and put them in the right categories, for how we're managing our books.
Right.
But in addition to that, like you might have things in your spa when you, let's say, for instance, like inventory. I used to keep a notebook at the front desk that was strictly for managing inventory for tax purposes. So we've got our inventory on the shelf, but we also have it in our computer system. You know, we as a business owner need to coordinate and count that inventory every month, because that is that looked at as an asset. All of that, those retail is like dollars sitting on your shelves. And
Yes.
so if you have anything missing or being used as back bar, or the shipping that you paid for it to arrive, or like any of these like underlying expenses that you're not really thinking about, because that doesn't get brought up in the transaction of your bank account to your bookkeeper. So it's like we need to have a manual written tally of notes that we then take to our bookkeeper each month. Are there any other areas where you would think that we might need something like this?
Yeah, so again, something that's again very, very basic that I actually should have mentioned earlier is keeping your personal and business expense separately, right? So if you have connected your bank account, but then, let's say you're using your personal account for business expenses, your account, your bookkeeper is probably never going to know, right? So and then again, just something similar is you have connected your bank account to QuickBooks Online or your accounting software, but then you're basically using for your personal expenses. Sometimes that happens, where you're like, hey, this is not a business expense,
Yeah. Yeah.
so
Right.
just be mindful of that. And then also you want to work with somebody who actually understand, hey, okay, yeah, this is not okay, this is not acceptable, right? Because you might claim those personal expenses as business expenses, but then if I ask for more evidence to get a notice, it can be a bit of a problem. Now there are strategies or things that we can do to include that. For example, travel, right? If you have a business purpose and a personal purpose when you travel, it can be considered a business expense if you have a genuine business purpose. Let's say you had a business meeting, you went for a training, right? We have these amazing conferences throughout the year for med spas, right? And if you go there and then you had a meeting with your, let's say, your employee, or you have a board of director, right? Or you have board advisor. Again, those are also the things that we try to guide clients, provide templates like, hey, this is how you can do. A lot of those things are, you're not paying extra for that. Like you don't have to pay your board of advisors, but you
Yeah.
can have board advisors, and you can take them to conferences, let's say, and then, you attended a conference, you had your meeting, and then, you're free to do your own things. So you plan accordingly, making sure that you're documenting everything. So you are prepared if in case IRS, they ask for evidence or they get back to you. So
Yeah.
yeah, those are a few things that you want to be mindful. Um, keeping personal and business expense separate is like a big one, right? So that's something you really want to take care of. You
Well,
really want to separate them out.
yeah, that goes back to your uh, ordinary, reasonable, and necessary.
Right. Yeah,
It
yeah.
makes sense for your type of business. Yeah.
Absolutely. Yeah. Again, and if you're taking an expense that, yeah, again, if you have um a skincare business where, you have products going to every I have some skincare companies, and they're obviously sending products to e-commerce company. They have, clients all over the US. You want to make sure you're tracking sales tax for that, right?
Mhm.
So again, more but the more your business grows, the more things we have to monitor it, the more things we have to look out for.
Well,
Yeah.
awesome, Asad. Well, thank you again for doing this. This was a fun conversation. We talked for almost a whole hour now.
Yeah.
I loved it. Yeah. So tell everybody how they could get a hold of you if they are looking for some tax planning information, a CPA or bookkeeping. How can they get a hold of you?
Sure. Yeah, I'll leave a link. If anybody wants to reach out to me, they can also connect with me on LinkedIn. Asad Faruqi CPA. That's my name on LinkedIn, and that's where I try to connect with my audience, my fellow CPAs as well. But yeah, obviously, you can always reach out to me on my website, LinkedIn, or the link.
Awesome. Awesome. Well, thank you so much again. We're going to end this now, but that was awesome. So thank you again. And I'll make sure we put the link in the description. This will get uploaded to a couple of different places. So we'll have it there as well. And anybody else, you can reach out to me and I'll connect you with Assad too. So, all
Yeah,
right.
sounds good. Thank you so
Cool.
much.
You're welcome. All right.
Bye.
Bye. All right.